simulation settings. The ECOG Assistant insights helped inform the physician's independent clinical decision-making, and the physician ultimately chose to adjust the timing of the patient's medication instead. We have also seen clinicians use event timing information to identify periods when medication coverage may be inadequate and adjust patients to longer-acting medication formulations. More broadly, clinicians are reporting that the updated tool simplifies review and provides meaningful time savings across a full RNS clinic. The launch is also giving our commercial team a new way to expand the scope of the discussions within existing accounts. By demonstrating how ECOG Assistant can simplify data review and support clinical decision-making, the team is engaging a broader group of physicians and reinforcing the differentiated value of the long-term data generated by the RNS system. These early examples illustrate why ECOG Assistant is strategically important. Beyond delivering meaningful efficiency in routine patient review, ECOG Assistant demonstrates how our unique device capabilities and associated proprietary data assets can be translated into practical capabilities that support more informed treatment decisions and improve the experience of managing RNS patients with capabilities that uniquely differentiate the RNS system. The remainder of our product development roadmap also continues to progress, including additional AI-enabled tools, development of our multimodal foundational model, remote care capabilities, automated detection, and our next-generation system. During the quarter, related to our multimodal foundational model, we completed a key phase of model training and continued testing its ability to interpret increasingly complex patterns in intracranial EEG data. Encouragingly, the model is learning clinically relevant patterns in brain activity, suggesting the potential to uncover individualized patterns and relationships that are difficult to detect using traditional approaches. We believe this is an important step toward generating new insights, and as the model continues to train and refine, see meaningful opportunity to further personalize therapy, optimize treatment, and improve patient outcomes over time. Importantly, all of this is made possible by NeuroPace's proprietary data asset, which now includes more than 27 million intracranial EEG recordings generated from recordings within the RNS system. We also continue to make strong development progress on remote care, which is designed to allow physicians to program RNS patients through telehealth and enable patients to prepare their device for an MRI without requiring the physician to be physically present. By reducing the need for certain in-person visits, remote care has the potential to lessen the travel burden for patients, expand access for those who live farther from epilepsy centers, and allow physicians to manage patients more efficiently. During the quarter, we further advanced usability testing and validation activities, and we expect to submit remote care to the FDA by the end of 2026. We continue to allocate resources toward programs that can improve patient care, increase physician efficiency, and expand the long-term value of the RNS platform. With that, I will turn the call over to Patrick for a detailed review of the quarter financials and outlook. Patrick?
Thank you, Joel. I will review our second quarter 2026 financial performance in more detail and then discuss our updated full-year guidance. As Scott mentioned, beginning this quarter, results from our distribution agreement with Dixie Medical are being reported as discontinued operations. Accordingly, unless otherwise noted, the financial results discussed today reflect continuing operations and exclude the impact of Dixie Medical in both the current and applicable prior year periods. As we have previously prepared, you can reference the additional tables in today's earnings release to help with modeling historical financials. In addition, gross margin and operating expenses are discussed on an adjusted non-GAAP basis, excluding stock-based compensation. Reconciliations to the most directly comparable GAAP measures are also included in today's press release. Total revenue in the second quarter was $22.8 million, an increase of 17% compared with $19.5 million in the prior year period. Service revenue was $302,000 compared with $937,000 a year ago, representing an expected headwind of more than 300 basis points to total company revenue growth. RNS system revenue was $22.5 million, representing growth of 21.3%, compared with $18.6 million in the second quarter of 2025. Growth was supported by continued adoption and utilization and favorable pricing compared to the prior year. For the first half of 2026, RNS revenue was $44.2 million, representing growth of 20.4% compared to the first half of 2025. As we have previously discussed, we believe evaluation over 6-month periods provides an informative view of underlying performance in a procedure-based business. First half growth was consistent with our long-term framework for the current adult focal epilepsy indication. Adjusted gross margin was 83.4% in the second quarter, compared with 84.0% in the prior year period. The slight year-over-year decline is driven by modestly higher material costs, partially offset by favorable pricing. GAAP gross margin was 82.8%. Total adjusted operating expense was $21.9 million, compared with $21.3 million in the second quarter of 2025. Operating expense increased approximately 3%, meaningfully below our revenue growth of 17%, reflecting continued operating leverage while we invest in the business. Adjusted sales and marketing expense was $11.5 million, compared with $10.7 million in the prior year period. The increase was primarily related to sales and field support personnel and other sales-related expenses associated with the continued scaling of our commercial activities. Adjusted research and development expense was $6.3 million, compared with $6.0 million in the prior year period. The increase primarily reflects product development-related investments supporting our next-generation platform and AI-enabled tools. Adjusted general and administrative expense was $4.1 million, compared with $4.6 million in the prior year period. The year-over-year decline primarily reflects one-time executive transition expenses incurred in the prior year quarter, partially offset by higher personnel-related expenses in the current period. Adjusted loss from operations was $2.8 million, compared with a loss of $5.0 million in the second quarter of 2025. Adjusted net loss was $3.9 million, compared with a net loss of $6.8 million in the prior year period. Adjusted EBITDA loss was $2.8 million, compared with an adjusted EBITDA loss of $4.9 million in the second quarter of 2025. GAAP net loss from continuing operations was $6.2 million, compared with a net loss of $10 million in the prior year period. We ended the quarter with $51.9 million in cash equivalents, short-term investments, and restricted cash, compared with $54.8 million at the end of the first quarter 2026. Long-term borrowings totaled $59.0 million as of June 30, 2026. Turning now to our outlook for 2026. We are increasing full-year total revenue guidance to a range of $99.5 million to $101.5 million, compared to our previous range of $99 million to $101 million. The increase in total revenue guidance reflects improved visibility into service revenue, which we now expect to be approximately $1 million for the full year, up from previous guidance of $500,000. Underlying RNS revenue outlook is unchanged at $98.5 million to $100.5 million, or growth of 21 to 23% from our current adult focal indication. We expect our third quarter RNS revenue growth to be similar to our first half RNS growth rate of approximately 20% year-over-year. Consistent with our prior guidance, the revenue range does not include any contribution from an expanded IGE indication. We are increasing full-year adjusted gross margin to a guidance range of 82% to 83%, compared to our previous range of 81.5% to 82.5%. The updated outlook reflects our first half performance, favorable pricing, and continued management of manufacturing costs and product mix. We continue to expect full-year adjusted operating expenses to range from $90 million to $92 million as we continue to invest in our business to drive increased physician and patient adoption. This range includes approximately $10 million of stock-based compensation, which is a non-cash expense. Within operating expenses, we continue to expect adjusted sales and marketing expense of $46 million to $48 million, These investments support targeted commercial expansion, market development, patient pathway resources, and the continued scaling of our field organization. We continue to expect adjusted research and development expense of approximately $27 million. Our R&D investment is focused on the next generation RNS platform, the NeuroPace AI suite, remote care, clinical and regulatory programs, and other capabilities that strengthen the long-term differentiation of the platform. We continue to expect adjusted general administrative expense of approximately $17 million, reflecting the systems and infrastructure needed to support a growing organization while maintaining disciplined management of corporate overhead. We now expect full-year adjusted EBITDA loss to be between $7.5 million and $8.5 million, improved from our previous expectation of a loss between $8.5 million and $9.5 million. We remain focused on balancing investment in the company's long-term growth opportunities with continued financial discipline and progress towards sustainable profitability. With that, I will turn the call back to Joel.
Thank you, Patrick. To close, our second quarter results demonstrate continued execution in the areas that we control. The core RNS business delivered in excess of 20% growth during the first half, consistent with our long-term framework for the current adult focal epilepsy indication. We continue to expand adoption, increase utilization, and build referral pathways, while maintaining strong financial discipline and investing in the long-term growth of the company. We remain laser-focused on advancing the IGE opportunity and bringing this therapy to patients. At the same time, our other strategic initiatives remain on track. Our clinical evidence base continues to strengthen as demonstrated by the Nautilus study publication in epilepsy. Our product development process is working as evidenced by the launch of ECOG Assistant and the initial examples of its demonstration of unique device platform technology capability and its translation into value in clinical practice. And our broader product development programs continue to progress. We remain focused on executing across the core business, advancing the IGE regulatory process, and developing the differentiated capabilities that can expand the impact and value of the RNS platform over time. Thank you for your time and continued interest in NeuroPace. Operator, we will now open the line for questions.
We will now begin the question and answer session. Please limit yourself to one question and one follow-up. If you would like to ask a question, please press star 1 to raise your hand. To withdraw your question, press star 1 again. We ask that you pick up your handset when asking a question to allow for optimum sound quality. If you are muted locally, please remember to unmute your device. Please stand by while we compile the Q&A roster. Your first question comes from the line of Anthony Petrone with Mizuho. Your line is open. Please go ahead.
Thanks, and good afternoon, everyone. Hope everyone's doing well. Maybe Joel, to start here, you mentioned the submission issue request meeting, the SIR meeting. I think I may have missed it, but is a specific date set yet in September? And then what should we be thinking just after that meeting? How will it play out in terms of milestones? Is there a potential for some Q&A back and forth ahead of a formal submission? And are you still in the camp that a resubmission could happen before the end of the year? And I'll have one quick follow-up.
Thank you, Anthony. Excellent questions. So a specific date for the SIR is not yet set. The specifics that I would offer to you there were in my prepared comments, which is that the preparation of the analysis and development of the data that will go into the SIR request and be the basis for the majority of the discussion is on track. So we're in good shape there, and things continue to progress. We expect to be submitting for the SIR and having that meeting then over the next few weeks, as I think I had commented previously. And so, again, things continue to move and develop in the direction that we had previously discussed and are on track as well. Anyway, I'll just put in here. You didn't specifically ask it, but ongoing, the periodic ongoing discussions with the agency and interactive engagement has also remained on track. With regard to next steps, you laid it out there, but in general, you could think about it as we expect to have that meeting over the next few weeks based on our current understanding, as I had mentioned on the 28th of July when we first talked about it. Our expectation is that we would not require a full restarting of the 180-day clock. Our current expectation, based on the way that the agency has interacted with us when we have amended this submission a couple of other times during the review, is to stay interactive. As you know and others know who are listening, it's within the agency's purview to go ahead and restart a clock and take the full 180 days. But with the way that they've been acting with us, we wouldn't think that would be the case. So I'm going to leave you wanting a little bit on specific dates, Anthony, but you can think about it as we're on track for the SIR. We expect the SIR to be happening here over the next few weeks. The majority of what's going to go into the SIR, we expect to be what's going to go into the amendment. So we think that can happen relatively in a timely fashion following the SIR. And then we would expect the agency to work with us interactively and expeditiously following the submission of the amendment. They can take out to the 180 days, but we don't expect that they will.
Very helpful. And then the quick follow-up here is actually on the U.S. market push, and I think the plan here called for, expansion into community centers beyond CECs to coincide with the IGE label expansion, but certainly the core business on the focal side continues to outperform. So just wondering, would you make a push into community ahead of IGE label expansion, or is it still let's get that label expansion and then make that broader push in terms of site expansion? Thanks again.
It's a really good question, Anthony, and the short answer is yes. We have the advantage here of having the adult focal indication obviously already today, and so that gives us the opportunity to be in the community, be talking with referring physicians, as well as establishing relationships with community-based programs as well as level 3 programs, such that they can either refer to level 4 centers, refer to level 4 centers for implant, get the patients back and program themselves, or in some cases, level 3 and community centers have both the patient populations as well as the professional staff services and complementary infrastructure to be able to diagnose, manage, and treat patients within those sites. So we absolutely are and have been increasing our footprint from a community perspective, which has the advantage of laying a bunch of track, if you will, in anticipation of an indication expansion as well. But we can do that in support of our current business, and it's been beneficial with our current business, while then also preparing for what we plan for in terms of indication expansion.
Thank you. I'll hop back in.
Your next question comes from the line of Lawrence Biegelsen with Wells Fargo. Your line is open. Please go ahead.
Hi, this is Ross Osborne on for Larry. Thanks for taking our questions. So starting off, would you provide some color on how the clinical community reacted to the FDA letter regarding your application for IGE? Were physicians surprised, concerned about your viability to get approval, or understand the FDA's caution and wanting more data?
It's a great question, Ross, and we actually had conference call follow-ups not long after we talked with you on the week of the 28th there. And I personally, as well as Dr. Morrell, spoke with the vast majority of the investigators that were there. I'd say there are really kind of 3 points of feedback. 1, thanks for letting us know and for keeping everybody up to date here real time. 2, just as we do, they remain very confident in the clinical data that was generated from the study. And 3, let us know how we can help. And because people see the need that this patient population has today, as we all know, drug-resistant idiopathic generalized population doesn't have options with regard to neurostimulation, and they're not surgical candidates by the nature of the disease. And so the clinical community really sees the nature of the unmet need and the gap in what's available to them today. They have been impressed with and only supported by the publication of the Nautilus data in epilepsy that came out. And in particular, the investigators that we're close to are obviously very close to what they saw in their own patient populations. And again, remain confident in the data and want to know what they can do to help.
Okay, great. And then your next generation platform came up a couple of times in your prepared remarks. Could you provide a finer point on where you stand in the development timeline and remind us of some of the improvements?
You bet. So the next generation platform is our next generation, to be specific, that's our next generation hardware platform, our next generation implantable device. And there'll be a number of aspects about that, but it will expand the capability and capacity of the system from the management of the potential for additional lead configurations is one. Bluetooth low energy communication is another, and so you can imagine being able to have the device seamlessly communicate from a Bluetooth perspective is also something that would be particularly helpful. And then a number of other our pipeline we haven't fully talked about yet, but it'll be the chassis side of the thing you could look at to give you the best feeling for timing and timeline that we've communicated publicly would be the Investor Day materials that are on the website, and so development work is very active. In D, and the D is going to fit AI and remote care perspective. Will just be buttressed on the 320, and that it'll be just an opportunity for us to do more.
Think about it as faster processing, especially with this one that we did, but it's we're looking forward to it.
Your next question comes from the line of S. Your line is open. Please go ahead.
Hey guys, thanks so much for taking the questions. Maybe if we could just touch back on this, that the current expectation is to stay interactive with the agency, but maybe you could help us frame what the potential outcomes could be and how equipped you are to handle any feedback. One follow-up.
It's a great question. We expect to the purpose of the meeting is really to provide a forum for us to agency on the specifics of what they're looking for and our plans for data and the reporting. So we feel like we've got a good roadmap today based on the feedback that we've gotten from the agency, both by way of their letter as well as our interactions with them to the meeting with a good direction and approach for what we believe they're looking for. And then, of course, the work coming out of that will be based on how well, in fact, are we aligned and have we gotten the development correct. I expect that we do have a pretty good line of sight on that, and so we'll and then submit that amendment in as Work is going on now, which is why I provided the update in my prepared comments. To submit that SIR request, and we'll be prepared to go into feedback, unless there's something that just comes that we haven't.
Okay, that's super helpful. I guess maybe would just love to maybe understand a little bit more what you saw on the ground as it relates to utilization.
Thank you, Priya, and I know you've been reading parts of the business. It's fun for an operator to get to talk about that. The expansion in the business. If you think about our field presence, right into those centers. And so the way that we're really working on something like 5 or 6 epileptologists. And there's maybe and so one step for us to expand the envelope is to within that adoption, we have what we call the modern RNS. Recent calls, number one, the advent of network stimulation. The thalamus, and that has really been an area of expansion. Actually are going down vis-a-vis neuromodulation and the brain's activity to inform where you might want to resect, or if you know you have an area where you want to resect, but there's also areas you want to treat from a focal perspective that you can't resect, it can be used as a complement to that. So increasing adoption as well as increasing utilization within the level 4. Anthony asked earlier about expansion into the community and direct-to-patient and direct-to-patient caregiver, as well as direct-to-referral community digital marketing and patient educational efforts. And so we feel like we've got multiple shots on goal here for developing the market.
Awesome. Thanks.
Your next question comes.
I think where consensus sits today is about 23% top line growth, and I've previously pegged the RNS business about 20% in line. There's some inclusion of IGE that might not be included in 2027.
I think as we've talked about, we need to get further clarity on the timing of the IGE approval, which we, again, are very optimistic that it of 2026. So what I would repeat is that we continue a little bit of time. We haven't given out their 27 and 28 when the contribution
initiatives. How should we think about monetization? Is this really through increased unit volume within the core RNS business, or is there eventually a pathway to more meaningful AI-specific revenue?
Thanks, Frank. It's a great question. And as a basis, enabling unit volume associated with RNS. So the management of a patient, improve outcomes. We system unit sales. I think there are other algorithms can do by way of helping us predict the appropriate detection and therapy settings. And you think about things like some of the partnership work that we've done. We think there are other potential business models. Capability and underlying assets that we have. Talking about any of that. For right now, what you should think about is with more efficient and effective data management as well as detection and therapy parameter settings and the potential to even further increase what are today best-in-class effectiveness outcomes. And so all of those things read on in basis of our business.
Yeah, I think the one thing I would add related to ECOG outside of level 4 and in that community setting, creating a tool which we view as very favorable when it comes to IGE.
Frank, you're going to rue asking the question, but the only other thing I'd mention, and I said it in my prepared comments, is that I think sometimes the recognition of the importance to monitor, record, and then analyze training data set for all of the algorithm work as it should be. 1. 2, nobody else can follow us in. It is a unique aspect of the platform and something that I think positions us particularly well for the future in other disease states as well. Individualized nature of the platform of the RNS system, a data moat that's only getting bigger and deeper.
Very helpful. Thank you.
Your next question comes from the line of Michael Kratky with Leerink Partners. Your line is open. Please.
Sam on for Mike. Thanks for taking our questions. Just wanted to go back years of implant volume or, reach kind of a peak level of utilization.
Hi, Sam. Thanks for joining. Those are great questions. I'll start with the center discussion, and then we'll talk a little bit more about patient pipeline. As I mentioned earlier, we 4 centers, and so for us, it's less of a as we have expanded more into level 3 and are unique in a lot of ways. Some centers, it's really just a contracting activity. They have the functional neurosurgery capacity. They have the patient population, and it's a pretty quick training exercise running. Others, depending on the investments that they may need, infrastructure, it can take them a little bit longer than that. But for us, fairly straightforward. We have a very sophisticated field commercial organization to expand their adoption. And as you might imagine, that is a faster process than trying to get an entire center to develop the infrastructure and have the referral pathways and everything else. The right way to think about it is based on indication. Regional or focal disease will undergo phase 1 evaluation. Then they move from there to a phase 2 evaluation, which is an inpatient procedure, where SEEG electrodes are used to localize the specific, and then those patients are adjudicated to either receive the evaluation of a focal patient. And that can take any to get reworked up if they get referred in where there isn't a that population, because it's a generalized disease that happens everywhere all at once, localization, or that second step beyond just the video, and doesn't need to happen. And so you can imagine yield loss of getting someone to be able to organize their lives in such a way to go in for a long-term. You can have the likelihood of that being a challenge population. And so in some ways, frankly, we think the adoption dynamics within the IgE population we think can be a much less friction and the adoption dynamics within pediatrics. We as well grown the business 20% year on year with that indication, but we think the indication expansion to come can result in even faster patient pipeline and more smooth adoption dynamics.
Related to this year, what I would add is, we saw accelerated growth in Q2 over Q1, 21% versus 19.5%. And our guidance on the RNS specifically for the full year would imply a higher growth rate in the second half. And there's a lot of focus as an organization, and I'll say myself personally, on more analytics around that patient pipeline. And the field is doing a really good job of tracking that. We have it down to the patient account level, et cetera. And there's more good analytics to come out of that. And we're beginning to really peel the onion back on there, because clearly that patient identified today and helping them through that journey and converting them quick implant of the future.
Understood. Thanks for all the color there, guys. And then on IgE, can you maybe just talk about your expectations? Are stricter labeling in certain subpopulations, and what ultimately gives?
Yeah, it's a great question, Sam, and how the discussions are going to go here, because that's really the point of the and where they have a need for additional information. Information and context and answering their questions on populations. We think that the clinical meaning is significant, and so providing information, awareness, context, understanding.
Thanks.
Your next.
Hi, everyone. Thanks for taking the question. Maybe you mentioned implies a step up in the back half of the year. You the confidence in that step up in the back half, and that
ever since he's been here. And so Look, there's we're a procedure-based business, and so, you can have surgeries that can move out from month to month or quarter to quarter. What gives us confidence in the second half is what we've done historically. If you go back in time and look at even second half of last year, we grew 32% year over year, so it's a really strong comp that we're coming up against. And so we expect that to happen again. It's everything we talked about, right? The sales team that we added, they're a little bit more tenured. I think we get smarter every day on analytics. We continue to drive deeper into accounts with utilization. We talked about all-time highs in subscribers, et cetera. And so I think for us, you hit the point well, is that the second half, depending on the range, you're anywhere from 20% on the low end of the guidance to 23% on the midpoint to 25%. And so those are all the 20% that we saw in the first half. So history and obviously visibility in the business.
Great. And then as a follow-up, sustainable adjusted EBITDA and free cash flow profitability, growth with profitability, especially given you have big opportunities. So should we expect to see more drop through to the bottom line moving forward? Thanks for taking the question.
Those are great questions. We're going to invest in the business to take advantage of some significant opportunities. That has all been factored into talking about EBITDA, adjusted EBITDA here, and not cash flow break even, but we've talked about, and we are working to both the opportunities on the top line of the business, and that's our first. Good financial discipline through the middle part of the income statement, including we are committed to having significant growth opportunities in front of us. We think we can do both. Opportunities go wanting in favor of come here. But again, I think we've demonstrated here over the past number of years. CFO here sitting across from me who spends all his time doing all that, and so maybe I
as Joel said, we just have a huge untapped TAM right now with adult. So, as Joel said, we have shown steady progress on cash flow. The increase in revenue guidance on the service side, as well as the revenue with the strong gross margins that we have.
Your next question comes from the line of Yi Chen with H.C. Wainwright & Company. Your line is open. Please go ahead.
Hi, this is Katie on for Yi. This may be something you're not quite ready to answer yet, but looking at your new AI assistant, is it priced or monetized separately from the RNS system or bundled into existing pricing? And as a quick follow-up, is that contributing to already guiding to, or is it purely an add-on retention tool at this point?
Hi, Katie. Thanks for those questions. It is part of the RNS system and not monetized separately. Increased efficiency and potential for improved outcomes. And everything that's going on in the business has Assistant product here in the middle of the year is also part.
There are no further questions at this time. I will now turn the call back to Joel Becker for closing remarks.
Thank you, and thanks all of you for your ongoing interest in and support of NeuroPace. We are focused on leading the lives of people suffering from epilepsy by reducing or eliminating the recurrence and occurrence of debilitating seizures, and shooting from a commercial referral and direct-to-consumer perspective, expanding adoption and utilization within our current population, expanding that has no device-based options available to them today. The RNS system to build on data, AI analysis, ongoing execution and realization of these elements of our strategy are and will help advance the standard of care for these patients and be valuable to all of the members of the NeuroPace community. Thank you. Operator?
This concludes today's call. Thank you for attending. You may now disconnect.